drum set is here to tell us about mortgage. He's an expert when it comes to mortgage financing. I mean, presently he's with the Scotia Bank. As an advisor, and we are privileged to have him here. He's not just a specialist in financial firm, he's a Christian, he's a man of God, and he's coming here to speak to us like brothers to his brothers and sisters. So with joy in my heart, I am glad to bring up David Gibson.
That's wonderful. Marquinhos, thank you very much. It's a pleasure for me to be here. It's an honor to be with you on your family day, and I really appreciate the invitation, so thank you very much. And you know, I trust that I can be a blessing to you all today, because you have already been a blessing to me today. Praise God, because when the worship team came up, man, the first words that you said were, "Great is thy faithfulness, oh God." And you know that feeling that you get when you hear something or you see something and you feel your emotions start to well up inside you, and you feel your eyes start to cloud and your heart starts to soar. Well, that's what happened to me when you came up and you said, "Great is thy faithfulness," because it just made me think, back so far to how faithful God has been to me and to my family. As Marquinhos said, my dad was a pastor in the church for many years, and when he first opened his church, Marquinhos, we used to meet at 3 o'clock on Sunday afternoons. So I was thinking about that as you were singing, my sister, and we rented a building from another organization. Unfortunately, it wasn't a church that we rented from. It was well, at that time it was called the Oddfellows Temple. So for a little boy in the Oddfellows Temple, there were all these pictures with one eye, and there was coffins in the basement and all those kinds of things. As I was thinking back as you were singing, there were so many things that just came back to my memory about those 3 o'clock services. So, since I was the pastor's son, it was my job to come and set up the pulpit. I used to have to set up the microphones. We didn't have PowerPoint back then. We had something called transparency sheets. Does anybody remember transparency sheets? Okay, so instead of clicking the mouse, you used to have to switch the transparency so it would project up on the screen. So it was my job to set that up. It was my job to lead the music. And I know that when you split the keyboard and you got the bass on one side and you got the treble on the other side, I used to do that. My brother used to play the drums, in the church. So as we were singing about the steadfast love of the Lord, I was just thinking, man, it really is steadfast. And it took me back to all those years. And so we rented that building, and then we rented another building, and then we bought a building, and the church grew, and it's just wonderful to think back of all the wonderful things that God has done. So you've already been a blessing to me today. So I hope that I can be a blessing to you today. So another thing I remember from being a pastor's kid is that when you had a guest in to speak, you always hoped that the guest knew how much time they had. Especially at our church, because we had to take everything down, and we had to get out of there by a certain time because we only had it for so many hours. So, Marquinhos, how much time do I have?
Well, we talked about maybe 45 minutes.
Okay, all right, that's good. So I'll keep track of my time there. So I'd like to start with a little story today. And it's about a boy that was born in the 1930s in an island in the Caribbean. And I don't know if any of you have ever been to one of the beautiful islands in the Caribbean, but it seems like many of those islands have a dichotomy to them, because a person might go to Barbados or Trinidad or Jamaica, a place like that, and you see the big fancy hotels and the big cars and the casinos and the fancy restaurants. But what you might not see is there's another side to those islands where people struggle to meet the daily needs of their life. And they often don't have enough to eat, they often don't have enough room to live, they don't have enough clothes to wear. So this boy was born on the other side of that Caribbean island. And he was born to God-fearing parents, and they did the best that they could, but they taught him to have faith and trust in God. So there wasn't always enough food to go around for the family, for every meal. There wasn't always shoes to wear. There wasn't always clothes to wear, but they did have a faith in their heart. So this boy, as he grew, he found that he had an ambition that God placed inside of him to explore what he could be in his life. So as he became a young man, he got an education, he trained, he learned, he was certified as a school teacher, and he also learned to be a nurse, and he was employed as a nurse. And finally came the time to leave the island and to explore and to discover what life might have for him. So he traveled around the islands, working as a teacher and as a nurse, and just going through all those things that we go through as young people as we learn about ourselves and learn about life. And he went to a beautiful little island called St. Kitts, and as things turned out, before too long, he fell in love with a young nurse there, and found out that he and this young nurse had a lot in common. Not just that they were born just a couple of weeks apart, but she too had that ambition and that desire to explore and see what life has for them outside of what they had known in their lifetimes. And so they got married, and it came as no surprise that when this young lady, this young nurse, when she heard that there was a place called Kenora, Ontario, Canada, that was looking for nurses, that it's no surprise that this young couple didn't have to think about that for very long. They still had that adventurous spirit, and so it wasn't too long. They were married for only about a year, and they said goodbye to their friends and their families, and they headed to Canada to explore and to find out what their new life was going to be like. And so what they didn't know is that if you're going to come to Canada from a tropical climate, probably the month of February is not the best time to come. But they didn't know that. So as the plane landed in Toronto, they looked out the window, and that was the first time that they saw snow in their lifetime. And I don't know if any of you were in Canada in the 1960s, but February in Canada in the 1960s, it was pretty cold. And this young couple, they couldn't remember the temperature, but they often said it was approximately -1 million is about how cold it was up there. And so they stepped out of the airplane, and they stepped onto the snow for the first time in their life. And like many of us, the first time that we step on the snow, it's usually not too long until we end up on our backsides on the snow, right? Because we don't know how to walk on it. But that was the beginning of this adventure for this young couple. So they worked hard, they worked every day, they saved, they did everything that they can, and they lived in Kenora, Ontario. They decided we need to go on a vacation, and that only took about 5 minutes for them to make that decision. So they decided to go on a vacation, and what better idea than to explore this country of Canada. So they headed west, and they saw Brandon, they saw Calgary, they saw Regina, they saw all these places. And they came to a city, a small city with a funny name called Saskatoon. And as they toured around Saskatoon, they saw the university, they saw the communities, they saw the parks, they saw the riverbank, they saw all the beautiful things about this city, and they said to themselves, this is where we want to come and we want to raise a family. So it didn't take too long for that to become a reality for them, and soon they packed up what they had, and they moved all the way out here to Saskatoon. And again, they worked, they saved, they sacrificed, and they had the peace of God in their hearts. And it wasn't too long till the day finally came when they were able to achieve one of their dreams of home ownership in Saskatoon. Now back then, the house was $18,000 is what the price of the house was on 3000 block of 14th Street there. And so they realized this dream of being a homeowner. And so, as some of you might have figured out already, is this young couple were my mom and dad. And so, my mom and dad told us many times about their adventures when they left home, and how they came to Canada, and how they came to Kenora, and how they came to Saskatoon. And they also talked to us a lot about what it meant to them to become homeowners in this new country that they had moved to. And it was interesting because my father really instilled in me a belief that for those who want to own a home, and it's not something that everybody wants or everybody goes after, and that's fine. But for those who do, it's a great opportunity. And in our country of Canada, home ownership is the greatest single creator of wealth for the citizens and the inhabitants of the country. So if you're interested in home ownership, I trust that I can share some things with you today. That would be a blessing to you. And so if you want to own a house here in Saskatoon, unless you happen to have $300,000 just kicking around in your bank account, you're going to need to borrow some money. And you're going to need a housing loan, which is called a mortgage. And so that's what I'd like to talk to you a little bit about today. And as we think about home ownership, the term wealth always comes to mind. And wealth is defined as abundant supply. That's what wealth is. Wealth is abundant supply. And when a person has abundant supply, it leads to security, it leads to comfort, but most of all, it leads to generosity, right? Because that's what we need in our society, is people to give what they have for the benefit of their fellow citizens. So owning a home is a great part of that. And so as Christians, we understand the term abundance. Abundant, that term means a lot to us because we've received an abundant supply of grace and of mercy. So when we talk about wealth being an abundance of a supply and an absence of lack, as a Christian, I understand that because I've received grace that I didn't deserve. I receive mercy every day in abundance, that it's always sufficient, it's always more than I need. But our Heavenly Father has also told us that the same abundance that we experience in grace and mercy, that as our souls are abundant and as our souls prosper, He wants us to prosper in all areas of our lives that way. Not so that we can accumulate wealth or we can hoard or that we can be rich, it's so that we can live in abundant supply so that we can become a source of abundance to other people around us. And while that doesn't seem something that's specific to owning a home, the fact that owning a home is the greatest creator of wealth and abundant supply in Canada, as as a Christian, if that's something you do aspire to and that you feel that you want, you can know that it is a blessing that God wants to bestow on your life. So, as far as mortgage financing goes, or a loan goes, it's actually very simple, if you can believe it. I've been doing mortgages exclusively now for about 18 and a half years. It's what I spend my time doing, it's what I do. And the more I do it, the more I realize how simple mortgage financing really is. And sometimes we tend to make it a bit more complicated than it has to be. But there are really just three basic things that I want to talk to you about that would explain what the prospects of home financing and home ownership are about. It will also reveal some of the challenges that exist with obtaining a housing loan. Maybe some of you have considered house financing and maybe you've encountered some challenges. Maybe we can talk about that. Okay? So the first thing that is important with home financing and with obtaining a mortgage is affordability. Okay? Affordability. And affordability is just the analysis that's done when you're applying for a mortgage that looks at your income, your debts, and how much room there is between those numbers for your housing costs. That's what affordability is in terms of mortgage terms. And your housing costs are things like your mortgage payment, your property taxes, your condo fees, your heating expenses. Okay? So recurring costs that are associated with owning a home. And now the analysis that's done with a mortgage, if you really boil it down, it's probably not too much different than what you do when you're deciding if you can afford something or not. Whether it's a vehicle or music lessons for your child or a life insurance policy, you probably think to yourself, well, this is how much money I have coming in, this is how much money I have going out, this is how much money I have left. Can I afford to do this? And that's very similar to what happens in a mortgage application, except that, as you may know, when you are looking at a mortgage or talking about mortgage financing, it is an extremely heavily regulated industry. Okay? The government has rules and guidelines for almost every aspect of qualifying for a mortgage. So while this topic of affordability, if you strip it down, yes, it's about how much money's coming in and going out, but there's very specific rules for how a mortgage lender has to evaluate your income, how they have to treat your debts, how they have to do those calculations. And so that's where things can get a little bit involved with respect to applying for a mortgage. So my role in a mortgage application, like if you were applying for a mortgage, is I need to learn about what your situation is and have your situation over here, and then I have to look at the rules and the regulations that the government has put in place and just work with your application to fit it inside of what these rules and regulations are. So that's really what's involved. So with respect to affordability, there is one very important thing that I want to tell you with respect to home financing. If there's only one thing that you take away from our time together today, this is the one thing that is very important for you to remember. Okay? The most important thing that you can do to move yourself towards home ownership is to keep every single piece of paper that you get from anybody. Your bank, your employer, your credit card company, because when I'm talking about this affordability analysis and all these rules and regulations, the paperwork and the quality of the paperwork that you're able to provide can make the difference between you being able to get a mortgage or not, and you being able to own a home or not. So every pay stub that you get from your employer, I encourage you to keep that document. Every tax slip, every T-slip, every bank statement, okay? These days, banks tend not to mail, bank statements out anymore. So if you have to go online to get your bank statements, I'd encourage you to do that. Every investment that you have, keep every statement. So you're saying, well, why in the world would I need to keep all this paper? Well, it's because when it comes time for me to do my job and to take your situation and your application and fit it into these boxes that the government regulations have created, supported by documentation. So whether you want to keep a paper file or you want to store all your documents on your computer and back them up with a memory stick or something like that, if you have a goal to own a home, until you own that home, keep every single piece of paper that you get. Okay? You might not need them all, but sometimes we don't know what paper we're going to need and what we're not going to need. So that is a simple thing that you can do that, believe it or not, can make a huge difference with being able to obtain a home. So there are some challenges that arise with respect to this affordability analysis. And one thing is the type of income that you have, and you'll see why this documentation is so important. Because some people get paid a salary, where their income is the same every pay period. But some people get paid per hour, and some weeks they work 60 hours, some weeks they work 20 hours. So it may not be as simple to be able to properly analyze that person's cash flow, to be able to come up with the income side of that affordability analysis. So that's where all of your extra paperwork is going to be a benefit. Sometimes there's a lack of affordability. Okay, maybe the room that's available between the income and the expenses that a person has isn't sufficient to be able to qualify for that mortgage and obtain that home. Well, the good news is there's things that we can do and that we can work with to try to correct or improve the situation. Sometimes it may mean increasing income, obtaining a second job. Sometimes it may mean paying down a debt. Sometimes it may mean taking a little bit of time and waiting for an income tax refund or something like that. So it's very important to go into this affordability analysis with an open mind, and if things work out, great, but if they don't work out exactly the way that you might want, there's always things that we can do. There's always a plan to be able to move into the proper place. Okay? The second thing, that if a person is likely to make their mortgage payments, because when the lender or the bank is lending money, they're hoping to get that money repaid at some point in the future. And so credit history is very important, because it really is the only thing that the bank or the lender is really going to know of you, right? They're not going to know about your family or what your victories have been in your life or what your challenges have been in your life. What they have to go on is what the credit reporting agencies say about your history in terms of making your payments. And so when we talk about credit worthiness or credit history, the quantity of credit background is important, and the quality of credit background is important. Okay? Quantity is just the amount of credit history that you have. For example, if a person has a credit card that they opened up, let's say 6 months ago, and it has a $500 limit. Okay, let's say that that's the only credit history that that person has. Well, it's a big jump to go from a $500 credit card that's been open for 6 months to a mortgage that's going to be in play for 25 years for $300,000. Okay, so that's why the quantity of credit history is important. Okay, and the only thing that is more important than the quantity of your credit history is the quality of your credit history. Okay, and the quality of your credit history is just reflecting, more than anything else, do you make your payments on time? Okay, the most important thing a person can do to achieve a quality credit history is to make their payments on time. No matter how small the payment is, if it's a $9 payment on a credit card, or if it's a loan payment, or a line of credit payment, or a phone bill payment, if you're able to at least make your minimum payments on time, it is something that's going to help you establish a credit history. And you know, there's some things that we can do to enhance this aspect of our mortgage applications. So sometimes it might involve some sacrifice, right, to be able to qualify for that mortgage and to maintain a credit history. Sometimes it might mean getting a loan for a $5,000 car instead of a $50,000 car. Sometimes it might mean saving up for that new TV instead of going into the brick and buying the TV on credit. So it's very important that you have to identify what our goals are and what we want to accomplish. If your goal is to own a home and to get financing for a house, then I just encourage you to focus on that goal. Okay, so it might mean sacrificing some other things, but I always found that if that is the most important thing to you, and if you want to accomplish that, you'll be able to get those other things later. Okay, your new TV is going to look a lot nicer in your new house than it is in your apartment. Okay, your sport utility is going to look a lot better in the driveway of your new home than it is in the parking lot up behind the apartment. So it's important that as you think about your credit history, you might have to make some sacrifices, but the idea is to build up creditworthiness over time. One of the important things that helps you qualify for a mortgage is what we call installment loan history. An installment loan is just a loan where you're making the same payment on a regular basis all the time, like a bi-weekly payment on a car loan, for example. The reason that that's so important with qualifying for a mortgage is it's the same type of payments that you make on a house. So when your lender's looking at your credit history and they say, oh, this person's been making payments on their car loan really well for the last 2 years, well, there's a good chance that they're going to make their mortgage payments too. And that's what the lender is looking for. Okay? So there can be some challenges with respect to maintaining your credit history. And if you're human, like me, we make mistakes, right? And maybe we made some mistakes with our credit history. Maybe we borrowed more than we could at some time and we could repay. Or maybe we missed some payments. Okay, well, if that's you, my message to you is that is something that can be fixed and that can be corrected over time. If you've missed payments or you have a derogatory credit history, then what you want to do is, number one, you want to bring your debts up to date as quickly as you can. You want to sacrifice other things and pay down those debts. And that will be the start for improving or recreating your credit history. Okay? Maybe you've been able to keep your payments up, but you have a lot of different debts. You got a line of credit here, you got a loan here, you've got a credit card here, another credit card here, and a department store credit card over there. Well, what you want to do, see, that can be a detriment to your credit rating because it shows that you may be an avid credit seeker, okay? If you apply for credit a lot and you take out a lot of credit. But if you're in a situation like that, you'd be surprised at how easy the fix can be for that. So if you have multiple accounts with balances owing on them, what you want to do is, as much as possible, you want to move those balances into one account. For example, let's say you have a credit card with $2,500 owing on it, and a credit card with $5,000 owing on it, and a credit card with $7,500 owing on it. And you have a line of credit with a $25,000 limit that you owe $5,000 on. Okay? What you want to do is you want to take your line of credit, you want to pay off your $75 credit card, $7,500 credit card, your $5,000 credit card, your $2,500 credit card, move all that money into one revolving or line of credit account, and then focus on paying that off. So not only is it easier to just have one thing to pay off, but more importantly, just doing that will improve your credit score and your credit rating. Because one of the measures that goes into, well, a very important measure these days, that goes into the analysis of your credit history is use of revolving credit. How much of your available credit are you using? So if we take this example, if you're able to do that, then you've got 3 credit cards with a total of about $15,000 limits on them that you owe 0 on. So you've got 3 accounts that are reporting on your credit file with 0 balance owing, and you've just got 1 account with, let's say, a $20,000 balance on it. So that will improve your credit rating and also make it easier to pay down. Okay. Another thing is what if you have a lack of credit history? Okay, so has anybody here been in Canada for less than 10 years? Can you raise your hand? Okay, there's a lot of us. Less than 5 years? Okay. Less than 2 years? Okay. All right, so there's some of you haven't been in Canada for very long, so you haven't had an opportunity yet to develop credit history. Okay, like for me, I was born here. So when I was 18 years old, I was able to go out and get a credit card, right? And I was able to get a little car loan. So by the time I was ready to buy a house, I already had an established credit history. But if you've only been in Canada for 1 year or 2 years or 3 years, you're not going to have a 10-year credit history because you haven't been here long enough to establish that credit history. And there is a wonderful mortgage financing program that may help you, that I have used countless times to help new Canadians purchase homes. It's called the New to Canada program. This is a mortgage financing program specifically designed for people that haven't been in Canada long enough to establish a credit history. And it's very simple. All it does is it uses other things to establish your credit history, other than loans and credit cards. For example, is there anybody here that has a cell phone? Okay, well, if you have a cell phone account, that is an account that's in your name that the mortgage regulations allow us to use as proof of repayment history because you're new to Canada. If you're paying rent where you live, if you have a SAS power bill for the place where you live, those are things that can be used to establish a credit history for someone who hasn't been in Canada long enough to establish a credit history. It's a great program. Now, does anybody remember what I suggested is the most important thing that you do if you want to own a house?
Keep every piece of paper.
Thank you. You want to keep your paperwork. Well, this is an example of why this is so important. Okay, is that if we're going to use other things to help you qualify for your mortgage other than your standard loans and credit cards, you're going to have to be able to prove it with paper. So if you're renting your home where you live right now, make sure that your landlord gives you a rental agreement. Make sure that it has your name on it. Okay, preferably if it's a husband and wife, preferably that both of your names are on there. When your landlord gives you a receipt for your rent payments, keep that receipt. when you pay your phone bill directly from your bank account, keep that bank account statement. Okay, keep every bank statement, every rental agreement, every document that you receive from any organization that you deal with that has to do with your finances, because that paperwork can be used to create a credit history for you, even if you haven't been in Canada long enough to be able to establish a credit history. So I can't stress that enough. You might say, well, just got to save up a down payment, that's all. Well, you know what? The average price of a house in Saskatoon is about $350,000, which means you need about $17,500 minimum as down payment. That's 5% of the purchase price. You need another $4,000 or $5,000 for your legal costs associated with purchasing a home. Well, it's easy to say, yeah, just save up $20,000, okay? But when you are buying groceries and putting gas in your car and putting your kids on the soccer team and all these things that put demands on our finances, it's easier said than done, isn't it, to establish a credit history, especially since so many of us here are new to Canada. That can be a challenge as well, because one of the biggest sources that young people have these days for down payment for a house is what we call in the mortgage business the bank of mom and dad. Okay, if mom and dad were able to establish themselves and build their careers and pay off their debts and pay off their houses, you know, then when they reach that point in life, they've got resources to help their children, right? But when you're new to the country, you likely don't have access to that. You might, but you might not. So it's going to be up to you to find ways to establish a credit history, to establish down payment. And so there are some things that you can do. Now, first of all, the minimum down payment for the purchase of a house, a primary residence in Canada is 5% of the purchase price. Okay, and that is one great thing about owning a home in Canada. Even though you do need a large down payment, it isn't as much as is needed in other parts of the world. And so that money can come from your savings, okay? Any savings that you've been able to accumulate. If you have an immediate family member, like a mother or a sister or a brother, who's been able to establish themselves and build some wealth, as we were talking about before, and maybe you can be a recipient of their generosity, well, that is something that can be available for your down payment. There are some rules that the government has that can help you accumulate your down payment faster. Has anybody ever heard of a registered retirement savings plan? Okay, so that allows you to contribute money to a savings account up to a certain amount, depending on your income, and the money that you put into that savings account is not taxable. Well, as you might know, if you contribute to an RSP, whether it's a few dollars a week, a few dollars a month, it doesn't matter how small the amount that is, that accumulates over the course of the year, and as you know, that you're not required to pay tax on that income, so you might get some money back from the government for the income tax that you have paid from your employment earnings over the course of the year. Well, that's your money, and that can be used towards a down payment of a house. Okay. Now, it goes one step further. Has anybody ever heard of the government's home buyers plan? Home buyers plan? Okay. So what that is that we just mentioned, if you're able to contribute funds to a registered retirement savings plan or an RRSP, that money is not taxable. Well, if you're a first-time home buyer, and let's say you've been able to put $100 a month into an RRSP. Okay. Let's say you've been doing that for a couple of years, so you've put $2,400 into this registered retirement savings plan. Some good funds right now can make anywhere from 5 to 15% interest. So let's say your RSP has a balance of let's say $5,000. Okay, well, if you're a first-time home buyer, the government would allow you to take that $5,000 out of your RSP, use it towards the down payment of a house, and they're not going to tax you on the withdrawal of that RSP. See, the government wants to incentivize you to purchase a house because they know, number one, it's going to help you build wealth, and you know what happens when you build wealth, right? You pay taxes. So the more wealth you have, the more taxes you're going to pay, and that's how we fund the programs that we have in our country that the government does. So the government wants you to own a home for that reason. They know that if you own a home, that you're less likely to get involved in crime, that you're going to contribute more to your society, that you're more likely to raise your children with certain values. So that's why the government has these programs. So if you're able to contribute money to an RSP, not only will it possibly generate an income tax refund for you, which is money in your pocket that you can use towards the purchase of a home, but you'll also be able to withdraw that money later and use those funds towards the down payment on your house. With that home buyer's plan, one of the rules of it is you just have to pay that money back into your RSP over the next 15 years. So it's not an onerous requirement there. So finally, with respect to down payment, is I think you recall that I mentioned that one of the most important things is you have to do is keep your paperwork. Well, that's really important when it comes to down payment documentation. Okay? So this is why I'm suggesting that you keep every document that you have with respect to your bank accounts, because when you are applying for a mortgage, you have to, believe it or not, okay, you have to prove that the money in your bank account is yours. You have to prove where that money came from, okay? And it's simply because one of the great terrible things that's happening in our world right now is the movement of illegal funds around the world, laundered funds, drug money, terrorist financing, all those kinds of things. So the government has made the rules for the banks very onerous in terms of what banks have to do to verify that your money is not from some kind of an illegal source. So when you apply for a mortgage, they're going to ask you to show all kinds of statements for your money. So if you have those statements on hand, it's going to make that process a lot easier for you. And secondly, with respect to your down payment documentation, this one can be a little bit hard for some people to swallow. So I'm going to ask you to give me some credit with an open heart here for a minute, okay? If your goal is to buy a house, and if you're accumulating your funds for your down payment, if you're one of these people who likes to move your money around, okay? That, some of us, when we accumulate some money, we like to sit down in front of our computer and we like to transfer money between our bank accounts. And we like to send money there and send money there, and there's all this movement of funds between your bank accounts. While you probably have a good reason for doing that, that is a major red flag when you're applying for a mortgage. So if you're accumulating funds for your down payment, this is what I suggest you do, okay, is you're going to have to show the history of the bank account where your money is, and if that money is being transferred from somewhere else, then you're going to have to show the history of that bank account. So let me give you an example. Let's say you have a bank account where your paychecks go in, and then you have a bank account where you're saving for a car, and then you have another bank account where that's your giving account, where you put money in to bless other people. All right. Well, if you're about to buy a house and you're giving me the history of your bank account, and one day you transfer $2,000 from your savings account to your main account, and that $5,000 came from your giving account and went to your savings account and then into your main account, well, now you're going to have to provide documentation for all of those bank accounts. And you're going to have to explain where every dollar came from that went into that bank account. So if you sold your couch set for $900 and you don't have a receipt and that money went into the giving account, but then you transfer between those accounts, you're not going to be able to verify where that money came from, fortunately. So it's very important that, now I'm not telling you not to do all these things with your accounts. I'm certainly not going to tell you what to do with your money, but what I am suggesting is keep one account where everything can be easily traced. Okay? For example, the bank account that your paychecks go into, is keep that bank account clean. Okay? Try not to put any other money that it would be difficult to trace into that bank account. Open another bank account and put that money there. And when your money comes in from your employment, and then you want to withdraw money from there and put it into the savings account or the giving account, that's no problem. You don't have to verify where all the money is going to that you take out of your bank account. You just have to verify where the money's coming in. Okay? So my suggestion is that the bank account that your paychecks, because paychecks are easy to trace, because you get a pay stub every time that you get paid. You get some kind of a record or document from your employer, so you don't have to worry about that. So keep that bank account clean, and as much as possible, don't transfer any other money into that bank account. Okay? If you're getting money from the sale of your couch, or if you don't have a bill of sale or a receipt for it, then of course you're going to keep if you do. But if you don't, put that money into another account and keep this main account really clean, so that when you give the bank those bank statements, they can look at that and they can say, yeah, this bank account meets the regulations that we have to comply with to show where your money came from. So that doesn't sound like a big deal, but it's very, very important with respect to qualifying for mortgage. Okay? So in closing, I think we're right on time here. Yep, we're good for time. Okay. I just want to ask you, please, to just pass these out or just pass them around. Give one to everybody, please. Thank you very much. So I'd like to end with some concrete steps or next steps of what you can do. And there might be, if you are here and you want to move towards the process of home ownership, whether that's going to be next week, or whether it's going to be next month, or whether it's going to be 5 years down the road, it's all the same. These are the next steps that you can take. Okay? So this is the first step in the mortgage pre-approval process. Okay? And then what you can do is you can fill out this piece of paper, and you can scan it or take a picture of it and send it to me. My cell number is there, and my email address is there. And if you would like to do that, you send that to me, and I will send you back a pre-qualification mortgage scenario. Okay? Now, this is not a mortgage pre-approval, because we're not doing I'm not asking you for any documents at this point. I'm not checking your credit history. Like you noticed, there's no birth dates or social insurance numbers on anything. But this is just a great tool that will be able to give you an idea of where you stand. So it's not going to be perfectly exact, because that happens later when we get into the documents. But you just put down, and this can be your individual sheet, or if you're a husband and wife and you'd be making a joint application, just put the information on here for both of you. Okay, so, and I know you are all paying attention, so you're probably looking at this and you're saying, this looks a lot like that affordability analysis that you were talking about, and you'd be right, that's exactly what this is. So this is just, this information will allow me to do a brief affordability analysis for you, as a first step. So I can look at these numbers and tell you, well, this is an idea of what you could qualify for in terms of a mortgage. And then, excuse me, so I'll send that information back to you, and then you decide if you want to throw it in the shredder, you can. If you want to put it up on your fridge and use that as a reminder of a goal of something that you want to accomplish, great. But if you want to say, well, I think I'd like to see if I can buy a house, then we'll move on to the next step from there. I'll explain to you what documents you need, and we'll go through the full mortgage process. But that is what this sheet is for. And again, my phone number is on there, my name, my email address. It doesn't have to be fancy. Just make sure I can read it, please, and you send it to me, and we'll start a financial conversation about what's available to you. Okay? All right. Praise God. All right, well, thank you very much. As I said at the outset, I trust that this is going to bless me. I trust it's been a blessing to you, and I just want to remind you that you've already been a big blessing to me today. And I appreciate that, and I thank you for that. Thank you.
Shall we share the grace and fellowship? May the grace of our Lord Jesus Christ, the love of God the Father, and the sweet fellowship of the Holy Spirit be with us now and forevermore. Amen. Thank you so much.